All right. All right, so here we are coming back to this scenario. So we left off, we completed our transaction on May 8th. Now here is the transaction for May 10th. So you actually sold 30 mugs for $9.99 for $9.99 each for cash. Okay, so how are we going to journalize this?
Debit cash.
Debit cash, yeah, so May 10. We're going to debit cash. What else are we going to debit?
Sales.
I mean, sorry, not debit. What else? Other.
Sales.
Okay, so I'm going to go ahead and copy and paste up here. Okay, so good. So, and we sold, how many mugs did we sell? We sold 30. Okay, so what was our total sales here going to be?
$299.70.
$299.70. All right, how much tax is on this?
$24.72.
Okay, bringing a grand total of
$324.42.
$324.42. Good. And we sold 30 mugs. Okay, good. Let's see what happened next. So next we have on May 12th, you sold 60 mugs for $9.99 each to customer B on an account, and you gave him terms 10%, 10 net 30. Okay, so we sold 60 mugs to customer B on an account.
Accounts payable.
Say that again.
Accounts payable.
Not accounts payable. Nilo, can you stop moving your headset? Not accounts payable. That's when we owe money. So you're close. What's the other one?
Accounts receivable.
Accounts receivable, right? We don't owe money. The customer owes us money. So accounts receivable, what else did we do? What else do we need to recognize?
Sales.
Sales, yes. We need to recognize sales. And of course, with every sale, there's a sales tax. So this is May 12th. We sold 60 mugs to customer B. And of course, we also give them terms. So how much was selling 60 mugs cost us? I mean, how much did we sell? If it's $9.99 each and it is
It's $599.40.
perfect, how much sales tax is going to be on that?
$49.45.
Okay, and then, so what is the total amount that customer B owes us?
$648.85.
$648.85. Good. All right, so I already made adjustment to my entry here. So good. Okay. Now, of course, we made a sale again. So, what is the next scenario? So, on the 15th of May, customer B decides to return 30 of the mugs for a full refund. Okay, so if customer B decides to return to us, what are we going to recognize here?
Accounts payable.
Not accounts payable. We don't owe money.
Yeah, they owe.
Say that again.
Purchase return.
Not a purchase returns. We're not making a purchase. This is a customer that we're dealing with.
Accounts receivable.
Receivable, yeah.
Accounts receivable, good. But remember, we debited our accounts receivable. So that's actually going to be our credit here. Okay, so you guys are in this the general area, so accounts receivable. Good. We gotta reduce the amount that they owe us. Okay. Now,
Sales returns?
sales returns, good. Sales returns and allowances because he is actually returning all 30 cup mugs to us. Okay, sales returns and allowances. Good. So now that we know that he is going to give us back our items back, what else do we also have to include because we sold to this customer?
Taxes.
We need to give them back their sales tax, or in this case, deduct the amount of tax that was actually originally charged for. Good. So now that we have our foundation here, if we are returning 30 mugs, okay, how much money are we refunding for? Or in this case, how much is the total sales that we're refunding?
$299.70.
$299.70. Good. And then how much tax are we also refunding?
$24.72.
$24.72. Okay. And then lastly, what is the grand total that we are refunding to his account? Or in this case, reducing his account so now he owes us less. 324 and 42 cents. Good. Excuse me. And then now I'm going to go ahead and write here. Returned 30 mugs for full or actual refund. Hold on, I have forgot one more thing here. That it's supposed to be customer. Okay, so customer B returned for a full refund. Okay, so good. All right. So now question here is, now that we are actually he's refunding our items, does that affect our inventory worksheet? If this customer is refunding or returning items to us, does that affect our inventory worksheet?
Yes.
It
Why?
should, yeah.
Why?
Because we're actually getting more physical inventory.
Okay.
So we've got to account for that.
So we have to count for that. Okay, so that's what you guys say, okay? Now, did we even keep track of the sales in the first place?
No.
Did we got rid of any inventory?
No, it's
Well, no, I guess not yet. It's periodic, yeah.
Yes, exactly. Because what is our conception here?
At the end of the term.
At the end of the term, when we go down to the basement and we physically count, that's when we'll know, okay, we must have sold some here. But of course, in real life scenario, you wouldn't actually paste back sold inventory back into its place, because technically you shouldn't resell, products that other customers have touched before, or in other sense, other people bought back because they could have done something to the items, right? In this case, these coffee mugs, maybe the customer did actually use them and then they decided to return it. So we can't actually technically place them in the same location as our new inventory. But in this case, because we're just trying to understand the concept itself, again, we would have a special account for that. We'll replace it back into our what you would call it, refurbished items or returned items account, so then they can rest there. But in this case, we're just trying to understand the concept. So yes, we are essentially placing it back into inventory, but because we never counted for sales, and this is a sales return, it's part of the sales process. So we didn't make a purchase per se. But it is us selling the item and again receiving it back. So in this case, it does not affect our inventory worksheet because our inventory worksheet is only dealing with our purchases. Okay? So good. Now, let's see what happened next. Okay? So on the same day, so May 15, okay, you also sold 25 mugs for $9.99 for cash.
So sales.
Yes, sales. Now, is that the first thing you're going to recognize? No, we're going to recognize cash first because that's what we received. We're increasing our assets. Yeah, we received money. So, and sales is going to be our credit account. Okay. So, how many items did we sell?
25.
25 at $9.99, giving us a sales price of, what was our total sales?
$249.75.
Good. How much tax is going to be on that?
$20.60.
$20.60, giving us a total cash of $270.35. Good. All right, and then of course I'm going to adjust this little description here to say that I sold 25 mugs. Okay. Good. So let's go ahead and see what happened next. Okay. So then the 18th of May, customer A decides to pay in full with cash. So let's look at customer A. What did customer A even purchase from us? Well, let's look. Customer A purchased, they purchased 20 mugs from us, okay? And we gave them terms of 10%, 10, net 30. Okay, so we sold a total of 20 mugs to them. Did customer A make any returns?
Doesn't look like it.
No, it didn't look like it. So customer A, okay? So now we can go ahead and go back to the transaction for the 6th of May. And we're going to determine how much customer A actually owes us. So here, customer A, accounts receivable, they owe us a total of $216.28. Now, let's look at the terms. Did they meet the discount period?
No.
If they are paying now on May 18.
No.
Nope.
You said
Missed it by 2
no.
days.
They missed it by 2 days. Yes. So unfortunately, this person has to pay in full for the whole entire amount. Okay, so now we can go ahead and let's go ahead and calculate that. Or not calculate that. Let's go ahead and record this. So on the 18, so customer A is paying, and they're paying with cash. So what is the transaction at hand here? What are we receiving? We're receiving cash. Good. Okay. And how do we decrease something that they owe us? What account is that?
Accounts receivable?
Yes, we're going to empty out their accounts receivable. Okay. And this will be a lot more prevalent when we actually work into looking at our ledger. Okay. So how much did the customer A owe us?
The 216.28.
216.28. Okay, and they're paying in full in cash. So there you go. All right, and I'm gonna make my note here that customer A paid. Okay. Good. All right. Now that very same day, let's see what happened that same day. So on the 18th, you sold an additional 50 mugs at $9.99 for cash. Okay. So what's my journal going to be?
Cash,
Cash. Good.
sales tax.
But this time we sold 50 mugs. Okay. So how much was the sales for the total of 50 mugs?
$499.50.
$499.50. Good. And how much tax is on that?
$41.21. Are we rounding
41.
or
Yes, you should definitely round, especially when it comes to pennies. Yes, you have to round.
okay? So it's 41.21 then.
41.21. Good. And then how much cash are we actually receiving?
540.71.
540.71. Good. All right. Oh, good. I have 3 pages. Okay. So next one. So now that we finished that one, so then now May 20th rolls around. Let me see. May 20th rolls around, okay? You end up purchasing an additional 400 mugs at $2.80 each, freight costing you $80, and it's on an account from Cuppy's Co., so they gave you another terms of 5%, 15, net 30. So how are you going to journalize this?
Accounts payable, sales, and sales tax payable.
Okay. That's dealing with the customer. We are making a purchase of inventory.
Sorry, purchase expense.
Purchase expense, good. Okay. So we are making a new purchase. So I'm going to go ahead and find purchase expense, freight expense, and accounts payable. Copy. Okay. And this is May 20th. Oops. There we go. How many mugs did we purchase? We purchased a total of 400. Okay, at, was it 285? Let's see,
Yes.
400 at 280. Okay, so here, what was my total purchase expense?
11.52.
Okay, 1152.
11:20. It's mine.
11.20. Sorry.
No worries. Just making sure you got the correct answer. So how much was freight?
Freight is 80.
Freight cost you $80. So here in grand total, what is the total amount that I owe this person now, or this vendor?
1200. Your freight expense is wrong. It's supposed to be
It's 80. Yes, you're right. 80. Sorry, fat fingered that. So 1200. Perfect. Okay. Now I'm going to go to my inventory worksheet and fill this section out here. So we know that this was purchased on May 20th. He purchased 400 items at $2.80. Okay. With a freight of 80. Good. So how much is my cost per item?
$3.
$3 even. Good. So now that we finished that one right here, we also sold 30 mugs as well that same day for cash. Okay, I don't have a date here. Okay, so same day. I think this was also same day too. For this one was 5/18. Okay, so same day we decided to sell 30 mugs for cash. Okay, so how much is my sales going to be here?
$299.70.
Let's see, 30 times 9.99 to 99.70, and then how much tax?
2473.
24.73.
Yeah, that's what I got too.
Okay. Okay. All right, and then cash is going to be 3. That's what I got. So that's why I was like thinking same thing. It's supposed to be 42. No. Let's see. Equal
Well, for
round.
rounding, it's the fraction is 24.725, so I rounded up.
Yeah, me too.
Okay, hold on. Let me go ahead and just double confirm with you guys, because if that's the case, then I have to change the rest of the answers from above. Okay, so 43. So that means I have to fix, because we have the same exact one above here for the same exact, except we did 42 cents. So I'm going to do that again. So equal round. Okay, so yeah, this one. So if you guys journalize this as 72 cents, you need to go back and fix it. It's 73. And let me make sure this isn't affecting anybody else.
For which one?
For the purchase here from the 10th of May. Yes. Okay. All right. So now that we have that, we sold 30 mugs. Okay, so let's go ahead and look at what's next. Okay. So then May 22nd rolls around. Customer B pays in full with cash. So let's actually take a look at customer B. When did he actually make a purchase?
On the 12th?
Customer B, yes, he made a purchase on the 12th. Okay. Now, did customer B make any changes to his purchases? Did he make any returns?
Yeah, I returned 30 of them.
Yes, he returned half the stuff. Okay, so that means we adjusted on how much he actually owes us. So let's go ahead and take a look at that. So this is where the ledger account is actually going to help you out a little more, and also we're going to be introducing to the subsidiary ledger, which we'll talk about more in when we do our fictitious business. But see, let's go ahead and look on May 22nd. Let's go ahead and look at his transaction in our journal. So if we originally started off on May 10, or sorry, May 12th. He originally purchased for 64 648 and 85 cents. That's what his original amount that he owes us. Okay? So 64.85. Now, he made a return a couple days later. He returned half the amount. So we actually reduced his accounts receivable by $324.42. So now we need to calculate this. What is 648.85 minus out that 324.42? That's going to give you your ultimate amount of accounts receivable. So I'm going to go ahead and put it here on the side so then I can, I know how much accounts receivable that I am subject to be paid for. Okay, so that means I am owed $324.43. Okay, so it's important because we had that five pennies and we end up returning 2 of them, so we have 3 left over. Okay. So with that being said, okay, so this is May 22nd. Now, let's look at this conclusion, okay? When did he actually make, oh, sorry, I'm on this page. When did he actually make the purchase on? He made it on the 12th, okay? Did he make his discount period?
Yes, today is the last day.
Today is the last day. So not only do we need to look at his accounts payable, so now that we got the actual amount, now we got to discount him. Okay? So how much cash are we actually going to be receiving if he paid in cash? So that's our journal here. So the first thing is, what are we recognizing first? What are we receiving from customer B? How did customer B pay us?
Cash.
He paid us with cash. Okay? We also have to recognize that there was a sales discount because he paid within the period. So therefore, he also receives a 10% discount. Okay? And when it comes with discounts, what has to also be refunded as well?
Tax.
Yes, we have to give back the sales tax. And then lastly, he's then going to pay us for what he owes. Okay? So in this case, accounts receivable, we've already calculated it to be this amount right here, right? We calculated it to be the 324, what was it? 324.43. Okay? So that's our ending goal right there. Okay? Now let's look at the discount. He gets to receive a 10% discount off of his original purchase. Okay? Now, because he refunded the cups, right? So how many cups did he actually purchase from us?
30.
30. So, and then we're going to receive a 10% discount. So I'm going to go ahead and calculate this. If I know 30 of those cups are going to cost me $9.99 each, right? And I'm taking a 10% discount off of this, right? So what is my total discounted amount?
So sales discount would be, oh shoot.
32, 43, or 44.
Say that again? I did not get that. Okay, so if he bought 30 mugs from us, like actually buy 30 mugs because he originally bought 60, but he returned 30 of them. So therefore, he actually only purchased 30 cups from us. So that's going to give us a total of $299 without any sales tax included, right? We're only allowed to discount the actual sales price. So 10% of 299 and 70 cents gives you 29.97. Say that again.
97.
Mm-hmm. Okay. So then after we have this, how much tax, since we're giving him a discount of $29.97, how much tax do we also have to take out from this sales right here? Excuse me, sorry.
$24.72.
24. Okay, I did not get 24.72.
So you're doing for discount is 2.47.
2.472. Okay. Now, remember, we're not doing sales tax on the whole amount, right? If we charged him $24.73 of tax and we're refunding him the full amount, he paid nothing to the government, and the government's not going to be very happy about that. So in this case, we need to scale it down to actually how much we're actually refunding the amount for. So the sales discount here was only for $29.97 versus $299.70. So in this case, the total tax should be $2.47. Okay? Now, how much cash are we actually going to be receiving? If that's the case, how much cash are we actually going to receive?
$291.99.
$291.99. Okay? So that's how much cash we're actually receiving. Here's the 10% discount because that's what I offered this customer. Okay? He met the terms. And because of that, I have to also subtract out the percentage of tax that's included for that discount. And then this is actually how much he really owes us. Okay? So he's going to give us $291.99. And my note here is that customer paid in full 10% discount. Okay? Good. All right. Now let's go ahead and see what happened next, since that was dealing with a customer at hand. So then on May 22nd, we also sold an additional 15 mugs for cash. Okay, so how are we going to journalize this? How are we going to?
Cash,
Mm-hmm.
then sales tax.
Good. This is 5/22, so the same day. But this time we sold 15 mugs. Okay, so how much did it cost us to sell 15 mugs? What was our total sales price?
$149.85.
$149.85. What is the tax that we are going to collect from this?
$12.36.
$12.36. So in total, how much cash are we going to be receiving?
$162.21.
162.21. Okay, good. Okay. Now let's go ahead and take a look at the next section here. So then on May 25th, okay, you have a you have a sale for Memorial Day, okay? All mugs are 30% off discount, okay? And you sold a total of 175 mugs for cash. So how are you going to do this one? Okay? So we have a store-wide sale, okay, for Memorial Day sale, okay? All mugs are discounted at 30%. So how much or what are we actually going to be journalizing here?
Cash.
We are going to be doing cash. Good. What else?
Sales discount.
Good. Sales discount.
And sales tax.
No, we're not refunding sales tax.
Nope, just sales discount.
Just sales discount. Good. What else?
Sales and sales tax.
Yes, sales, and then now we do sales tax. So this is different. Remember, this is the scenario where this is an in-store sale. So at time of purchase, you're gonna discount it right then and there. You're not waiting till someone pays, or you're not waiting for sale till someone pays you. This discount happens immediately. So sales and then sales tax. Good. Okay. So how are we going to calculate it this time if we're doing it this way? How much total sales are we actually going to have?
1,748.25.
1,748.25. Good. All right. What comes next?
Discount.
You're going to calculate the sales discount next. Good. And how much was that sales discount for? 30%. Good. So I'm going to go ahead and equal round this times 30%. Oops, comma 2. So how much is 30% of this 1,748?
245.
48.
I got 524.48.
Yep.
Okay. So that's how much you're discounting off of this original price right here. So then how much tax am I actually going to be taxing the customers at? If there's a discount going on, how much tax is going to be taxed? Or how much tax am I going to collect?
Do the tax on the discounted amount.
Correct. You're gonna do the tax based on the discounted amount. So I'm gonna go ahead and go equal round. I'm gonna this minus this. Multiply that by the tax. Okay, and what should I get for the tax?
$100.96.
Okay, so I have too many errors in there. What did you say?
$100.96.
Okay, perfect. Good. 196 cents. So then how much cash am I actually going to be receiving? 1,000. No, I did not get that.
$13.77, 13.20.
1324.73.
1324.73. Good. So you're gonna take the amount, right? You could do it this way. You can take the total amount of sales, okay, and then you can subtract out how much the discount is. So that leaves me with 12.23, and then I can go ahead and add in my $100 to give me the 13.24. Okay. Good. All right, and then I'm going to go ahead and write in here that I had a Memorial Day sale. Okay. And I'm going to write that I sold 175 mugs. Okay. Good. Now let's go ahead and see what happened next. So on the 28th, okay, customer C wants to buy all 50 black mugs from you, okay? And because of that reason that they're getting rid of this inventory that you originally didn't purchase in the first place, you offered him an additional 10% discount, okay? And he paid with a Visa credit card. How are you going to do this transaction? So let's...
Accounts receivable.
Accounts receivable is when he owes us money. Now, when you use a credit card, what's the immediate thing that you should know when it comes to credit card transactions? It's a debit, but what happens to that credit? What are you essentially receiving? Okay, what happens when a customer charges on their credit card?
Accounts payable.
That's when we owe other people money.
Oh my gosh.
Okay,
Receivable.
not accounts receivable. That's when they owe us money.
Cash.
It's similar to cash.
Checking.
It's going to go straight to your bank. It's going to be paid off right then and there, and it's going to go directly to your checking account. So in this case, credit card transactions are almost as if you receive the cash itself right then and there. Okay? But you don't receive cash, right? It goes straight to your checking account. So in this case, this is the perfect assumption that it's going to go directly to your bank, which we're going to name it as checking account.
So credit
Okay.
cards are going to get treated as checking, essentially.
Correct. Because it's instant money. Okay, it's instant money. Obviously, when we dive into bank reconciliations, we're going to see that credit card transactions, they don't go through as instant as you think it is. It takes maybe a day or two, but usually it's treated as if it's cash. But you're not receiving physical cash. It's going directly to your bank. Okay. All right, so now we're going to treat credit card transactions as if they're checking, yes. Okay, or we'll learn about this electronic funds transfer. Okay, just exactly like that. So, good. So now that we recognize that there's a checking right there, what else are we going to also recognize? Sales, okay.
Sales discount first.
We're going...
10% discount.
Right.
Correct. Because he's coming into our store right then and there. He's making the purchase, and because he's getting rid of the inventory that I don't want anymore, I'm granting him an additional 10%. There's no strings attached, no account that you have to open with me, none of that. So because he's purchasing at time of purchase, it's going to be recognized as a sales discount right then and there. Okay? And then we could go ahead and recognize the sales. And then we can also recognize that, yes, you're going to get taxed for that. Okay, so let's go ahead and calculate this. If he purchased all 50 black mugs, all right, and let's assume that we sold them for the original price because black and brown's not going to make a huge difference, right? They're the same cup essentially, but they're just different colors. So the assumption here is that we're still going to sell it for the same price of $9.99. So
490.50.
So let me see. Sales is going to be typo there. 50 times 9.99, 49,950. Good. Okay. Now because we're granting him a additional 10% discount, how much is the discount off of this 49,950?
$49.95.
$49.95. Good. Okay. So how much tax are we going to charge?
825.
8 to 5%. Yes, but what is the amount of the tax that we're going to be charging?
$37.09.
$37.09. Okay, so therefore, how much is he going to pay this amount for?
I have no same number like you.
You do not have the same number?
No, I will control mine.
Okay, so which number are you off on?
462.41, but maybe I make
I've got the
mistake.
same thing.
My calculator is crazy today.
Dan, did you get the same number as me, or did you get the same number as Irina?
I got the same number as you, the 486.64.
Yeah, me too. I did too.
Okay, so best way to be able to make sure that your debits and credits match. Okay, so ultimately that's what I did. I just added all my credits together and I subtracted out my debit here. So in this case, did you calculate this? Are you using Excel?
Yes, I using Excel. But
Okay.
I use my calculator and make mistake, I guess, when I put the number.
Okay. All right. So go ahead and do it real quick. So $499.50 is going to be our total sales, right? And we're going to times that by 10%. Did I give him 10% or 15%?
10.
Okay, so we gave him a 10% discount. Okay, so 10% of $499.50 is $49.95. And we're going to subtract this number here and multiply it by the 8.25% to give us our correct amount of tax that we should be taxing them. We're taxing them on the actual sales price that we actually sell versus this number here. So this number is the number I use to calculate the discounted amount. So I took this number and subtract the discount to get $449.55. And I taxed this amount right here. Okay? And then from here, I need to solve how much I'm actually going to be receiving. Okay?
Yes, thank you.
Okay, so So then I'm going to go ahead and write here. Sold 50 black mugs at $9.99 each. Actually, no, I'm gonna do this. To customer C for 10% discount. Okay. All right. All right, so we're good on time here. So we have 2 more scenarios left. Okay. So now that we finally reach May 30th, okay, you're going to pay off all 3 bills that you owe for Cuppy's Co. For all 3 bills, okay? And you're going to pay them all on one check. Check number 201. Now, let's go look at our amounts and then look at our returns as well, because we did quite some returns as well as some discounts that we got. So first things first is let's go ahead and recognize here. So let's go ahead and do it right here to see how much stuff we actually have. So in this case, because we're doing LIFO anyways, here let's go ahead and calculate how much our accounts payable is actually going to reflect. So in this case, I started in May. My first purchase was the 500 items. And here we actually end up returning 15 of those items. So in this case, my total items here and the total cost is not going to be the same. So when I go back to my my journal, I'm going to look up everything that says accounts payable on it. So in this case, this is how we also are going to utilize our little whatchamacallit. This is how we get to take a look at how our general ledger works. So here we should have an account, the account called accounts payable. Okay? And we know that it's going to be either a debit or a credit balance, and then we're going to have our we're going to have a credit balance. Okay? So in this case, my first transaction that I purchased my items was indeed the very first thing on the 1st of May. Here I recognize that I charged my accounts payable as a credit for $14.25. Okay, so I'm going to go to my little empty worksheet here. And I'm going to recognize that on May 5th that I made a purchase on the credit side for $14.25, bringing my credit balance to be my $14.25. Okay? Now the next thing I saw here, or I did here, was I actually returned some stuff. I returned that 15 items for a total of $39.75. So because I debited my account, what's going to happen is that, what was this? This was May 5th. May 5th, okay, because I made a return, okay, I end up debiting my account for $39.75. Now, because I debited my account, which if we understand the whole accounting model, because this is a liability and we're debiting this account, we're actually reducing the amount that we owe. So by subtracting out, right, the $39.75, now for the first bill that we have, it's now in a grand total of $1,385.25. So that was the first bill that we encountered. Okay. So then as we scroll down, our next purchases was in fact on the 8th of May, which as we can see here, then we tacked on another additional bill here for the total of $737.50. Okay, so here in my little worksheet here, I'm going to skip this real quick so I can keep track of which bill came first. Okay, so this is bill or purchase number 1. Okay, so then on May 8th, we have purchase number 2. So P number 2, and it was for the $737.50. And we recognize that this should actually increase my accounts payable, right? Because now I owe this person even more money. Okay? But other things that we found out from this actual batch is we actually ended up realizing that 50 of those mugs were black. So instead of returning or refunding the full amount of those 50 items, what happens is that we actually ended up receiving a discount for these items. Okay, hold on. Let me find it real quick. Or unless that's for the next batch. Let me see. Accounts. I have accounts payable here. And then I have a sale. Accounts receivable. Sales, cash. Okay, so that's for the next. Did I forget to record it? Let me see. So we received the discount off of the $275. The $275 was on May 8th. Okay, so I guess I did forget to record it. May 8th. Okay. Oh, right, here we go. Accounts payable. Okay, so here I have the refund right here. I ended up getting a discount for $20.63. So this is where I'm going to go ahead and indicate that on May 8th that I actually got an allowance. Okay, and it reduced the amount I owe by $20.63. So therefore, my total amount that I have for this one is going to reduce my total amount that I actually owe by, I added, it's supposed to be subtract. It's going to reduce my total amount by that much. Okay. And then lastly, the last purchase that we made, there's no discount, nothing to it, was on the 20th of May. So by scrolling down and finding that transaction on the 20th of May, I tacked on another accounts payable for $1,200. No discounts, no returns or anything. So I have to add this additional for May 20th that I made a purchase number 3. Purchase number 3 for the grand total of the $1,200. So therefore, the total amount that I owe this company is going to be for is going to be for $3,302.12. Okay, so that's looking at all 3 bills and utilizing how we find out how much we actually owe in regards to the how much we owe this exact particular vendor. Okay, so now we have to figure out, well, when did I make the purchase, and did I, since I'm paying all three of them in one check, how many of these purchases did I actually was able to receive a purchase discount on? So now we have to do a little more thinking, okay? So if we made our first purchase on the 8th, on the 1st of May, the discount period was 5% net 15 net 30. I'm paying at the end of the month. So in 30 days, my first bill would have been due anyway. So in this case, I missed my discount here. Okay? I missed my discount here. So I don't take any discounts off of that one. Okay? Then the next purchase I made was on May 8th. Okay? So again, same thing here. Did I make the discount period?
No.
No, I missed it for this one as well, but I am paying it early. It's supposed to be due in 30 days, but I decided I'm going to pay everything in one shot. So in this case, I missed the discount period because the discount period should have been on the 23rd. We didn't make it. Okay? So then now, last but not least, let's look at our last transaction. So we did purchase it on the 20th of May, and they still gave us the terms 5% if you pay within 15 days, net 30. Did we make the discount period for this one?
Yes.
Yes, we did. So in this case, we have a purchase discount for 5% off of the actual purchase price. So that's where we also have to come in here and also determine that purchase discount. Okay, so I'm going to go back to my journal. Okay, so a few things that we're going to be doing is we are going to be decreasing our accounts accounts payable. So 530. So what was my total accounts payable that I owe? What was the total amount of accounts payable I actually owe? You guys remember? Okay, so if I look at this, my total accounts payable is going to be the $3,002.12. So that's for accounting for all three bills. Okay. Now, as we've learned, there are a few things that we also have to take into consideration, right? Because this amount, actually, let me do this again. Yes. Yes. Okay. So now that we are looking at this, what other things are we actually going to calculate in regards to making this payment?
The discount?
Yes, we have a purchase discount. Okay. And then how are we actually making a payment?
Check.
Yes. And check is going to be directly from your bank account. So checking is going to be there. So how much was the purchase discount for?
Um, 5%.
5%. Okay, so now we got to look back here. So on May 20th, okay, on May 20th, we made a purchase here. The total purchase price was the $11.20. Okay, now the $11.20, okay, we're taking a 5% discount off of this. So what is 5% of the $11.20?
$56.
Okay, let's see. $56, okay? So then how much is my total paycheck? Paycheck. How much is my total check going to be written out for?
$32.46.12.
32.46.12. And here I'm going to go ahead and make a little note here that the check was out to Cuppy's Co. Okay. I wrote out a check number 201, and I'm going to go ahead and write for all 3 purchases. Okay? And that's how you journalize that. Okay? All right, last but not least, we have our last scenario here is that you have a total of 700 units on hand. So what does that mean? I have 700.
Ending balance.
That's the ending balance. So therefore, we reach the end of our given period. So what do we need to do?
Yeah, we can finish the worksheet.
We can finish the worksheet. So let's go ahead and complete it. So how much total items did I purchase?
$11.50.
$11.50. How much was my total purchase price?
$3,031.32.5.
Good. Okay. How much was my total freight? $230. And then lastly, what was my total cost going to be? Good. Good. So now I'm going to go ahead and plug in my numbers here. So we have the 1150. We have the 3,132. Okay. Now we also have to look at how many returns and allowances we have. So in this case, I'm going to go ahead and plug in my formula here to get an accurate number. So how many total items did I return?
15.
Okay, at what cost?
$265.
6038 minus
260. Okay, yes. The total cost of me returning everything was 6038. Okay? So now I'm going to plug those numbers in here. Okay? So if I returned a total of 15 items and it cost me a grand total of all my returns and allowances to be $60.38. Okay? Therefore, my subtotal here is going to be what's my subtotal here?
3072.5.
12.
Perfect. Okay. Again, freight doesn't change quantity, so we can pull that through. However, how much was freight?
$230.
$230. So therefore, what is my total net purchases here?
$33.02.12.
3302.12, which is exactly what we looked at, right? That was the exact number we calculated when we found out how much accounts payable we actually owe. $3,302.12. Okay? Okay. Now there's one more thing that we forgot to do. We forgot to include the discount because now 3,302 isn't the total amount that we have because we also discounted the last one. Of course, the discount doesn't count as here, but we had a purchase discount. What was it?
$56.
It was for $56. So now I have to add this back in here. Okay, and this one's for the last batch, of course, for the 280. Okay, just a little reminder there. So now that I have to include that $56 of purchase discounts, now this has changed my numbers drastically. Okay, so let me go ahead and look at my journal real quick. Okay, so here we got a purchase discounts for $56. So therefore, how much is my actual total cost of my actual inventory this time? Because I needed to include that purchase discount. What happened here? It changed it by 56. So therefore, my amount that I have subtotal was for $30.16.12 plus the 230. Now it's 32.46.12, which matches how much you actually paid for the actual amount for the accounts payable. Okay, because you included the discount. All right. So make sure you have that. Okay, so because we did a purchase discount, right? This section is for returns, allowances, and discounts. Okay, so make sure you guys remember that. Okay, so now that we figured that part out there, so now we have to come down here and solve for the rest. We have no beginning inventory, but what we do have is our net purchases. So of course, because we don't have beginning inventory, our net purchases is going to be our total goods available. Okay, so now let's go ahead and solve this. If I originally started with 1135 and I only have 700, how many items did I sell?
435.
You've sold a total of 435. Okay, so I'm going to go ahead and place my formula here. Okay, so now that I have this section here, now let's go ahead and review. What costing method are we dealing with? Say it again.
LIFO.
LIFO. So therefore, which batch are we actually going to be taking out from first? We're going to start from the bottom. Correct. So this 400 items, we have a discount on this. So we need to actually adjust this amount. Now, are we taking the full 400?
Yes.
Yes, we are. So the 400, right? We know that we took a discount on it, so we need to adjust this. So it's no longer 1,200. It is actually going to be 1,200 minus the $56 of the discount to give us a grand total of $1,144. Now you can also do it this way too, just by looking at here, right? If we took $56 discount off of the 1325, right? Then you're gonna get 12 something. I'm sorry, wrong one. If it's 1120 minus the $56, okay, then you add the $80 free, and you should get the 1144. Okay, so therefore we are getting rid of this entire batch right here. So I'm going to go ahead and highlight this just so that we know that we got rid of this entire batch. Okay, now the next section, now it says that how many more do we need to sell?
35.
We need to sell 35. So which batch are we taking out from next?
May 8th.
We're going to take out from the May 8th batch, so the 250. Now, do we still have all 250 items?
Let's see. No.
Yes, we do have all
Oh,
250
yes.
items. However, what happened here though?
They
You
give
turned
discount.
$50 for a 15% discount.
We got a discount off of that. So in this case, this is where I actually have to just make that adjustment to the total amount and redefine the cost per item. So if it cost me in grand total of the $737.50, right? And I end up getting the 15% discount for the $20.63, then my grand total should be now the 716.87, and I'm going to divide that by my total quantity of 250 to give me my cost per item. Okay. All right, now that we have my cost per item, how many more items do I need to sell? I think I need to sell 35. So this again is where you need to go ahead and calculate how much it's going to cost you to sell 35 items if it is at $2.8674. So what's my total cost of selling these 35 items?
$100.36.
$100.36. Ooh, excuse me. So then now that we have this, so I have a grand total of selling 435 items, and my grand total is going to be for 1244.36. Okay, so I'm going to go ahead and bring that over. So how much is my ending inventory going to cost me? $2,001.76. Okay, and then you can also verify that by just calculating the remaining if you want to be accurate. Okay, so good. Now that we have our numbers, let's go ahead and place in our journal. Okay, so May 30th. What are my accounts going to be? Since I'm converting periodic inventory from purchases to inventory, what are my accounts going to be? This is the adjustment entry. So what am I going to journal as? Inventory. What was the specific item I bought?
Cups.
Mugs. Okay. Mugs. Good. Right? What is going to be the next account I'm going to be recognizing? What else am I going to be recognizing?
Yeah, cost of goods sold.
You got the cost of goods sold. Good. What else am I going to be recognizing?
The purchase expense.
Purchase expense. Okay. That's one of the accounts. Okay. What else?
Freight expense.
You're going to be recognizing freight expense, but these are all going to be credits because we're essentially zeroing them out. Okay. Freight expense. Say that again?
Return and allowances.
Yes, we have to recognize our purchase returns and allowances. Okay. Okay. So for now, what I'm gonna do is I'm just gonna have you guys plug everything in, and then we'll solve from there. Okay. So first things first is, what was my ending inventory that I solved for?
2,176.
Okay. How much was my cost of goods sold that I solved for? Okay. How much was my purchase returns and allowances for?
116.38.
Okay, now be careful. This includes the purchase discount.
Oh yeah, 60. What is it? 60.38.
60.38. Good. Okay. And then what was my total purchases?
31, 32.50.
Mm-hmm. And then lastly, what is my total freight?
230.
Okay. And then go ahead and equal sum each side so you know how much is you how much how many debits you have versus how many credits you have. Oops, excuse me, sorry. So I have 36, 70, 62 on one side and the other side as 33. Now if I subtract these two, I'm going to find out that I'm missing $56. Where is this $56 going?
Discounts.
It's the purchase discounts. Yes, because here's the thing. We debit it, or in this case, we credit it as a separate account. It is not not included with the purchase returns and allowances. However, when we calculate our inventory worksheet, it is included, right? It's just gumbled up into one. But in this case, we need to recognize that because we did separate those accounts in two separate ones, we need to also recognize that the sales return, the purchase discount is separate than the purchase returns and allowances. So again, $56, and then now we match on both sides, and that is how we are looking at this whole entire problem. Connecting our inventory worksheet, connecting our periodic sales and purchases, okay, and connecting the idea of what happens when we are dealing with purchase discounts, when we're dealing with sales and returns and allowances, or even purchase returns and allowances, and what we're dealing when we're involving sales discounts. Okay? Now, for the exam, I will test you on conceptual questions based on returns and allowances. Okay, this is the exam. However, for the inventory worksheet, I'm only going to test you on the very basics. Your purchases and your freight, and that's it. Okay, so there you will not see beginning inventory. You will not see any returns or any allowances or any discounts when you're filling out your inventory worksheet. Okay, just because with the time manner, I'm trying to make this exam not be a 12-hour exam. It's supposed to be ideally roughly 4 hours. So there's so much content I can place into an exam. So for the exam, you're not going to be tested on the actual calculations to figure out purchase returns and allowances or purchase discounts or any of those, etc. Okay? So your only job is to know what to do when you receive a purchase and how to cost them, because that's the most important thing that I'm going to be testing you on, is how to actually calculate LIFO, FIFO, and weighted average. Now on the exam, which one are you going to have? I'm not going to tell you, so you need to know all three, okay? All right, so if you have any other extra questions, this will be posted on the Google Classroom, this exact one. So yes, any questions on anything that we